Hello, Anthony.
Hello, Claudine.
We're here today to talk about IRS Appeals. And I think the overall feeling at the firm is that dealing with IRS Appeals is actually not too bad.
It's not
we
too bad.
Like this department.
That's true.
Okay, so why would you file an IRS appeal?
Many reasons. It's usually when it's something you sort of, if you follow the procedures right, you kind of automatically have an appeals where you're assessed something in an audit or there's some collection that the IRS wants to take. So why wouldn't you do this? Because they have discretion that the normal channels don't have. They can kind of look at something to say, you know what, this just isn't there's a more fair result. And we don't necessarily need to go by the book. We can look at some other factors. So it's something that if we have the opportunity, we usually always want to take. And it's also one of the reasons why we're trying to tell people, look, if you're getting in tax trouble, it's better to come at it sooner rather than later, because sometimes you can burn up those appeals by not responding to the IRS. And those appeals can really be valuable.
Yep. Okay, now if you do want to request an IRS appeal, you request an IRS appeal conference by filing a written request protesting their decision. Now there's two different types of appeals. There's collection due process, collections appeals process, program, So collection due process, CDP, is available if you receive one of the following notices, because the IRS has a lot of different notices. They love notices. Okay, so notice of federal tax lien, filing and your right to a hearing under IRC 6320. Final notice, this is a big one, notice of intent to levy and notice of your right to a hearing. Yep. Notice of Jeopardy levy and right of appeal.
That's a serious thing if that happens.
Yep. Notice of levy on your state tax refund, notice of your right to a hearing, and post-levy collection due process notice.
That's right.
Okay. Now, why don't you talk about collection appeals program CAP?
Right.
When would that be appropriate?
Right. It's kind of, we refer to the CAP appeal, which is somewhat redundant because it stands for Collections Appeals Program Appeal. Right. Well, no, we're not appealing the program. We're taking a cap. But that's just the way it is. You just have to tolerate that. So the cap is something that comes up. Now, there's one standard that's okay. There's one standard that's pretty good. That is, if you're going for an installment agreement, revenue officer, whoever you're dealing with, to say, no, you could afford to pay this much. You're saying, no, this is a better deal. As long as you haven't defaulted an installment agreement before, you'll get to appeals and you'll have a pretty good standard of review. They're going to review it and they'll say, okay, yeah, this is fair. This isn't unfair. Otherwise, for the most part, all the cap appeals is basically challenging, did the IRS act illegally?
Okay.
Not whether or not their discretion, hey, look, you're totally off base with this. Why did you guys think this? It's really, were you illegally doing something? That's the standard. So as you can imagine, that's a high standard. And we have, we've filed a lot of caps. We've won a few. And that is just such a high standard. And it's difficult. The caps we've won that didn't involve installment agreements, I can count on my hand. Okay. I can count on one hand. And I do have all 5 digits. And that is why, when the difference is with the collection due process, you have that much more favorable standard. So that's why we really don't want to have to file a cap unless we have to. If we have other appeals open to us. And by the way, you'll have the same appeals officer. The cap will go to the same office of appeals. And, you could have one appeals officer. This has happened. We file the cap. No, I'm not going to rule in your favor. Months later, you filed your CDP. Oh, yeah, I'll rule in your favor.
Oh, thanks.
Right.
Okay.
So it's just really that different standard of review.
And if you disagree with the cap decision, you can't go to court. That's it.
Right.
That's the end of it.
Right. And it was really something that was developed because of so many abuses that were going on. Abuses still happen. But 1998 is where a bunch of changes came in to say this was one last appeal to stop illegal things the IRS was doing. There was just a tremendous amount of illegal seizures. They really stopped seizures. There's really not a lot of seizures. So that's why this came in 1998, the cap, and a lot of the more protective appeals that came out. And, maybe a lot of taxpayers don't know that there is just so many more great appeals open than, if they had a tax problem in the early 90s.
Yes.
It wasn't there.
Yep. You can even appeal things like rejected offer and compromises.
Right, which is huge.
Proposed trust fund recovery penalty, denied trust fund recovery penalty claim, and denied request to abate penalties. So, it's a great option.
Yeah, and a lot of times, we file an offer and compromise. The offer examiner will look at it and say, I want to rule in your favor here. I can't. My guidelines tell me I can't rule in this, even though I know that's actually a really fair settlement. And so they'll say, okay, well, I know you're going to appeal this. And actually, I wish you luck. I hope you win. That happens a lot. So that's really something you want to use is your offer and compromise appeal. And also when you're proposed a trust fund recovery penalty, especially when you might not have been the one all that responsible. And this happens a lot with people who are responsible for withholding pay. There'll be a bookkeeper or somebody who is a signatory. Okay, this is what happens. Revenue officer will just pull the bank cards to see who's a signatory, assess the trust fund a penalty against all those people. Right, you're a signatory on it, but it doesn't mean you were the one who took the money and did something else with it. So that's really something you should really challenge that, because those numbers get out of control quickly. And also, the IRS is supposed to look at your collection potential when they assess that trust fund recovery penalty. What's this? Because these numbers could be $500,000, $1 million if you have a large company. What's the sense of going and hitting on somebody who's employed as a bookkeeper? That doesn't make a lot of sense, does it? So they're not supposed to. But again, this is something that's routinely overlooked. People don't look at this; they're not paying enough attention to it, and so you go to appeals, who really are. They really are the brightest people around.
Yep.
We did have another earlier video, and I was like, oh man, I wish I didn't say that. We talked about appeals offices around the country, and there was an appeals officer I worked with in California who I really liked. I was sort of battling with him at first, and then he came back with his reasoning, and I was like, okay, all right, but we can agree on this. Yes, we can agree on this. And then he gave me a bunch of great stuff for the future. I just kind of pick in his mind. I'm like, what about this? What would you do here? Well, I wouldn't have a case then. Oh, okay. So I'm taking notes. So he's really, really helpful. And in the video before, I said, the California offices are a little, not so bright. That was one. That was one appeals officer, not all of them. I was like, I don't think their training was all that great.
A little subpar. Okay, so it's important for people to understand, too, where the hearing is. It can feel overwhelming, but it can actually be on the phone or it can be in person. And if it's in person, it's good for everyone to know that it's not the IRS office.
Right. It's not really the IRS office. It could be near an IRS office, maybe in the same building, but you're going to the IRS Office of Appeals, and that when you show up, your receptionist could actually be your appeals officer, because there's like maybe one or two other people. Hey, there you are. And they don't get a lot of people in, so they'll be on the lookout. So it's much different.
And it's important to know they're independent, because the IRS actually took a stand here, which I thought was interesting, and said, we have a strict policy of making sure that the collection office can't point out any strengths or weaknesses in your case. That's why they're two separate offices. They're not supposed to be emotionally involved and sort of tell the appeals office, listen, this guy's a dirtbag, let's get him. And from our experience, we do find that to be true.
Yeah, it's true, even when we don't want it to be true.
Yeah.
Because we have cases where, something happened.
How about the woman with cancer that couldn't afford because she had cancer drugs?
Right.
It's something you may want the appeals officer to know.
And we want the revenue officer to be able to color the mind of the appeals officer, say, no, this is a really good guy who got screwed, so I think you should really rule in the favor. There's those situations. Well, they actually can't say that. They can't say anything, so it's up to us to make sure, hey, appeals, here's the whole facts. And we may say, the revenue officer didn't have an objection to this, but it's not really, they really can't check up on that. They can't, call the revenue, hey, did you really say this? They can't call the revenue officer and do that.
Yeah. Now, you can have representation at the hearing. That's important to know. This is what I thought was funny. On our very favorite website, irs.gov, they say that you may represent yourself at CDP, CAP, and other appeals proceedings. Or you may be represented by an attorney, CPA, or a person enrolled to practice before the IRS. Also, you may be represented by a member of your immediate family, or in the case of a business, by regular full-time employees, general partners, or bona fide officers. Some good ideas there, some not so good. So we'll start with first. You may represent yourself. May not be a great idea.
I would say,
I mean, the IRS is it's the single most complicated thing in the history of time.
Right.
If you think you can figure it out and represent yourself, even really smart people.
If you're in a CDP, you probably have this is probably a serious issue too. If you were able to figure that out, how to file it, now it's like, okay, you're smart enough to be pretty dangerous to yourself. That the appeals officers, and that this is, these tend to be our favorite IRS employees. I'll be honest, they do tend to do that, and they do tend to look at things sort of overall, and they'll look for something that might help out the taxpayer, but they're still limited. They're still limited. They can't represent you.
Yes, and they're really not supposed to give you advice.
Right.
They can tell you the law,
right,
but they can't give you advice.
And they will try to do your best. And a lot of them do want you to get an attorney because they know, first of all, now now they can negotiate with an equal. They don't feel great about beating up. A lot of them don't feel great about beating up on somebody, but we're able to move a lot quicker and get to the heart of the matter a lot quicker and come up with something reasonable that will be accepted a lot quicker than when they're trying to deal with a taxpayer. Okay, I got to educate this person on all of this. Okay, this is going to take a lot of my time. And that's the number one thing. You know, if you're looking to curry favor with the IRS, the best way to do it is just make their time, you know, get something together that they can rule on quickly, that's not making them jump through hoops and request document after document after document.
Yes.
They have a lot of cases to go through. That is across the agency.
Yep. So yes, it's a good idea to have representation by an attorney or CPA. Also, you may be represented by a member of your immediate family. I think that's not a very good idea.
Can you imagine my 6-year-old? That's like your immediate family.
Well, or even say my
sad.
sister,
Or
who,
your
let's say she was an attorney.
Okay.
She's emotionally involved with me
We
now.
have many sisters.
Yes.
So which one?
Let's say Monica.
Monica? Oh, good,
Yeah.
good choice.
Yeah. And she's calm, cool, and collected, but
Yes,
she
yes.
would still be emotionally involved.
That's
and
right.
when you have someone emotionally involved representing you, it's probably not going to go too smoothly.
They can't be all that objective.
No, and we have, you keep saying that our biggest client base is attorneys. They come to us for help because they know they can't represent themselves.
Right. And I didn't mean to imply that choosing Chrissy or Sally would be a poor choice. So
No,
I don't want
they
to
would also
imply.
be.
They would be excellent choices as well.
Yes. Chrissy might be a little emotional,
Chrissy, okay.
but then, if she'd be good to fight for you.
Oh, great.
Okay. So yeah, I mean, if you do have any issues with IRS, if you're looking into appeals, don't hesitate to contact us for assistance. We have over 10 years experience. We've handled thousands of cases successfully. You can contact us, info@IRSMedic.com. If you want more information about the firm, visit IRSMedic.com. You can like and comment below. You can subscribe to our channels for updates. Thanks so much for watching. IRSMedic, the law offices of Parent & Parent, LLP. Real tax attorneys for tough tax problems.